Welcome to our channel, where we bring you insights into the fascinating world of investments. Before we dive into the world of investment metals, don't forget to share, like, and subscribe to our channel for more financial insights. Your support helps us create more content just for you. Today, we're embarking on a journey to unravel the mystique of investment metals. Are they just shiny objects of desire, or do they hold intrinsic value as part of a diversified investment portfolio? To understand this, we'll travel through time, exploring their historical significance, their modern-day applications, and their potential for future growth. So, buckle up as we set out to uncover the allure of gold, silver, platinum, and palladium, the stars of our story today. Let's begin our exploration, starting with an introduction to these fascinating investment metals. Ever found yourself pondering over the worth of investment metals? This is a question that has intrigued many of us. Today, we delve deeper into these fascinating commodities. Investment metals, namely gold, silver, platinum, and palladium, have been pivotal to human civilization, holding significant roles throughout history. From the ancient Egyptians to the Roman Empire, these metals were not only used as a trading currency, but also as symbols of wealth and power. They sparked desire and were cherished objects of beauty. Gold, often regarded as the first currency, was used in ancient civilizations due to its durability, malleability, and radiance. Its timeless appeal and its often perceived safe haven status in volatile times have firmly placed it as a prized investment metal. Silver, while less expensive than gold, was similarly used in older civilizations and shares many of gold's investment attributes. Its usage has evolved from currency to photography, medicine, and technology. Platinum and palladium, the lesser-known members of the precious metals family, have interesting histories too. Their rarity and the discovery of their unique properties resulted in their usage in various industrial applications, from jewelry to automobile catalytic converters. They've emerged as potentially valuable additions to a diverse investment portfolio. These metals have been an integral part of the global economy, with their value impacted by a myriad of factors. Economic conditions, geopolitical tensions, supply and demand, and even technology play a role in determining their value. Their history and continued relevance prompt an interesting question: what makes these metals valuable as an investment? Let's delve deeper to understand their pros and cons. First, let's delve deeper into the merits of investing in metals. A key advantage of metals as an investment instrument is their role as a hedge against inflation. To illustrate, whenever traditional currencies fail to hold their purchasing power, owing to inflation, metals, on the hand, typically uphold or even bolster their value. An example worth noting would be during the inflation crisis of the 1970s, when gold prices surged nearly 20-fold, protecting investors' capital from the rampant inflation. This is attributed to the fact that they are finite resources that can't be produced whimsically, unlike fiat money. Essentially, the supply-demand dynamics work favorably for metals. Limited supply coupled with increased demand, particularly during turbulent economic times, pushes the value of metals up, protecting investors from inflationary pressures. Investment metals also serve as a store of value under economic downturns. The term store of value refers to an asset's ability to retain its purchasing power into the future. In times of financial instability, investors gravitate towards metal investments, regarding them as a safe haven due to their intrinsic value. This means that even amidst a stock market crash, the value of your metal investments tends to remain relatively stable or even augment, providing a cushion against financial loss. For instance, during the 2008 financial crisis, while other asset classes plummeted, the price of gold soared by over 25%, safeguarding investors from the widespread financial debacle. Another advantage is the universal acceptance of metals as a form of currency. The term universal acceptance refers to the widespread acknowledgement and acceptance of an item as a medium of exchange. Gold, silver, platinum, and palladium are recognized and valued globally, making them a liquid asset that can be easily converted into cash if the need arises. They are not tied to a specific country or government, and their value isn't on a country's economic condition. Thus, irrespective of where you are in the world, metals can be readily exchanged for goods, services, or currency. Each metal also has unique properties that can be beneficial in diverse market conditions. For instance, gold is often viewed as a stable investment, while silver can provide more substantial returns in a bull market. Platinum and palladium, employed extensively in the automotive industry, can benefit from growth in this sector. While these advantages are alluring, it's vital to understand the possible drawbacks before making an investment decision. Now, we delve deeper into the potential downsides of investing in metals. As steadfast as they may appear, metals with their own distinct set of challenges. One of the most prominent challenges is the cost of storage. Unlike digital investments like stocks or bonds, which exist merely as figures on a screen, physical metals demand a secure place to be stored. You'd need to consider renting a safety deposit box, which can mount up to a significant yearly cost, or perhaps purchasing a secure home safe. While a one-time investment, a home safe can have additional expenses associated with installation and home insurance implications. This tangible aspect of metal investing can result in additional costs that often go overlooked. Another less attractive aspect of investing in metals is the lack of regular income. Most other forms of investments, like stocks or real estate, generate some form of regular earnings, such as interest or dividends. Metals, however, are unlike these asset classes. They do not yield any income until they are sold. This means that profit from a metal investment is purely contingent on the metal's increase in value over time. A stark difference from the regular income through interest or dividends that traditional investments offer. Speaking of value, metals are notorious for their price volatility. While its true metals can act as a hedge against inflation, their prices can also fluctuate wildly and erratically in the short term. Metals prices are subject to numerous global influences, such as supply and demand, geopolitical tensions, and economic health. This constant fluctuation can be unnerving for investors who lean towards stability and predictability in their portfolios. Lastly, projecting into the future, we must consider the potential for decreased demand. With our world becoming more environmentally conscious and shifting towards a greener economy, the demand for certain metals could potentially decrease. This decrease in demand could lead to a significant plummet in prices, and investors could see their metal investments devalue. So, with these detailed cons in mind, does investing in metals hold merit? It's a question that still doesn't have a one-size-fits-all answer. It hinges on various factors: your financial objectives, your risk tolerance, and your faith in the future of these precious metals. In conclusion, the value of investing in metals is not a one-size-fits-all scenario, but rather, it is significantly influenced by individual investment goals and risk tolerance. For instance, an investor seeking a safe haven for his wealth during tumultuous economic climates may find metals, with their inherent stability, quite appealing. Simultaneously, an investor with more aggressive growth-oriented objectives might find metals rather slower in their appreciation, thereby not aligning with their investment strategy. To illustrate, metals like gold, silver, platinum, and palladium can serve as substantial buffers during periods of economic instability. This is primarily due to their intrinsic value, a characteristic that helps them retain or even increase their worth, even when traditional investment vehicles may be faltering. For instance, during periods of hyperinflation, when the value of paper currencies, the price of gold often soars. Similarly, in times of geopolitical unrest, investors often flock to precious metals as a safe haven, pushing their prices up. However, it is crucial to remember that investing in metals also presents unique challenges. Unlike stocks or bonds, metals do not yield dividends, meaning the only profit to be made is through price appreciation. The costs associated with investment in metals can also be significant. From storage fees to insurance costs, these expenditures can eat into potential profits. Potential price volatility, driven by supply and demand dynamics as well as macroeconomic factors, can also pose a risk to metal investors. Investing in metals should not be the only avenue explored. The concept of a diversified investment strategy urges investors to distribute their investments across a variety of asset classes, This could include equities, bonds, real estate, and yes, even metals. The idea behind this strategy is to protect against potential losses in any one class by spreading the risk. A well-diversified portfolio can provide a steady growth trajectory, even when certain sectors or markets are underperforming. Ultimately, the decision to invest in metals should be made within the broader context of an individual's overall financial situation, risk tolerance, and investment goals. The decision should be well informed, considering the benefits and potential challenges, in line with a diversified investment strategy. Remember, investing is not just about making profits, but also about safeguarding your financial future. Before we wrap up, don't forget to share this video with friends and family who might be interested in investing in metals. The decision to invest is a significant one, and it's always beneficial to have as much information as possible. This video could provide them with a solid foundation to start their investment journey in metals. If you found this video informative and helpful, please give it a thumbs up. Your likes help us understand the kind of content you appreciate and want to see more of. It also helps others discover our content, so they too can benefit from these insights. Finally, if you haven't already, don't forget to hit the subscribe button. Our channel is dedicated to providing you with insightful and reliable content on various investment strategies. By subscribing, you'll be the first to know when we release new videos, ensuring you're always up to date with the latest investment insights. Thank you for watching. Stay tuned for more investment insights, and remember, smart investing is the key to a secure financial future.